Hello traders, Adam here with Bull Logic. Wanting to talk to you today about the option profit. Now, one thing we know at Bull Logic is a lot of traders don't really have a lot of experience trading options. Even less have experience trading credit options. Now, one thing we do at the option profit is sell credit options. This is how we were able to make 100% gains last year, zero losses. We had a 23% return, but it does you no good if you don't know how to put on the trades. So today I'm here to talk about using ETrade to put on our trades. Now, what I have here in the top is the ETrade website. I have already logged in, and down here I have an alert. This is a typical alert that we send out in the mornings before the market opens. Typically, you will get the alert 1 to 2 hours before the market opens. That gives you plenty of time to read through the alert, understand it, ask me any questions that you may have, and then finally to put on the trade and sit back and wait for it to go. You don't have to rush to try to beat the market. You don't have to try to scramble to try to get the trade in before you get the wrong price. It's not like that. We give you ample time to be able to easily get on the trades. Today we're going to talk about how to get those trades on. So let's look at the alert a little bit more in detail so we know what to do. First thing to notice is the subject. It's going to say the option profit, and if we are putting on a new position, it'll be followed with new position. This is the subjects that we use. That way you know exactly what we're sending you, and you know exactly what to expect when you open the email. When you open the email, you will get it, and it'll be from me, Adam at thebullogic.com. If you get any emails that are not from Adam at thebullogic.com, it's probably not a correct email. Then you will have the name of the newsletter, the option profit. This is help you know if you have multiple newsletters, which one you're reading. Then we will have the date of the alert. Today we're going to use the 23rd. That is the date of today. That's February 23rd, 2013. We're going to open a new position as you see down here in the status. We can also adjust a position or close a position, and we will say that to whichever one we are doing. And down here in the next section is where you really have the meat and the potatoes of the alert. This is going to tell us exactly what we're going to do. And so we have the trade where it says sell SPX April 1365 puts and buy SPX April 1360 puts. Now that looks like a lot of gibberish, and we are going to break it down and show you exactly how to put that trade in a minute so you can better understand it. The type of trade we're going to be putting on is a vertical spread. It is a spread because we are both buying and selling options at the same time. That's what makes it a spread. Our bias is going to be bullish. That means we want the SPX or the S&P 500 to go up in price. That's how we're going to make our money. Our premium is the amount of money we're going to get for each spread. In this case, it's 0.25 or $25 per spread. The max return is 5.26%. If you want to learn how we figure that out, make sure you read the FAQs on our website. It tells you exactly how we figure out max return. Our break-even price is $13.6475, and which is currently 150 points away from the underlying price. That just tells you where we begin to lose money at expiration. Our underlying price, that is what the SPX is currently trading at right now. It's 1515.6. We also have the days to expiration and probability of loss, and both of those are pretty self-explanatory. So when you open up your email, you read through it, you see all this stuff, you get into your ETrade platform. The first thing you're going to do is click on Trading and Portfolios. When that pops up, you want to make sure it is under the Trade tab, and then you're going to come down here and we're going to move over to Options. All our trades are options, so you just want to go ahead and go there. And it brings you up a nice option window. So we have our basic options or our spreads, and then you also have the buy rice, the butterfly, and the condor. Since our alert said vertical spread, we want to go ahead and click the spread tab. This is going to pull up a tab where we can put in multiple options. So the first thing we do is enter our symbol. It is SPX. And we're going to go ahead and click go. And it's going to pull up the XPX information. As you see, the underlying is 151560, exactly what we have down here in the underlying price. Now we want to go ahead and pull up an option chain just to make this a little bit easier. We can go ahead and just fill this out manually, and I'll show you how to do that in a second. But if you pull up an option chain and click that, it pulls up this little window. It gives you all the strikes, all the calls are on the left, the puts are on the right, the strikes are in the middle. Our symbol is still XPX. but we want to increase our strikes to all. And it's going to go ahead and refresh. And now we want to move over to the proper expiration. Now you see our expiration is written here in the trade. It is April. Right now we're looking at the March. The little W means it's a weekly. Again, we're going to move over. It takes a while for it to refresh and load. And one more. We have the quarterlies. That's the Q. As you can see, if you hover over it, it tells you. April. There you go. The April monthly options. As you can tell, there's nothing written on. There's no Q. There's no W. That means it's the monthly options. That's the ones we want to trade on. So we're going to look for the 1365 puts. And since we're puts, we're on the right side. And we're going to scroll up to 1365. As you see, the 1365 strike and the 1360 strike. So now it says sell the SPX April 1365 put. So I come down to the 1365, and as you see, if I hover over, it says click to sell. So I want to go ahead and do that, and it's going to come down here, sell the 1365, and I also want to buy the 1360. So we have come up to the 1360s, and we hover over the ask, and it says click to buy. I want to go ahead and do that. So when those pop up, I'm going to go ahead and click trade. And what's going to happen is it's going to fill out all these boxes with these two trades. Now, another way to do it is just to come in here. And so we just go through sell to open because we're going to sell puts. Our expiration is going to be in April. Remember, we're not going to do the Qs or the Ws. We're just going to do the straight April. And the strike we want to sell is a 1365. We also want to buy. As you see, we want to buy the 1360 puts. Put. Again, we want to do April. And we want to go to the 1360s. That sets up the trade for us. Now, the only thing else we have to fill in here is the contracts. Now, the one thing you want to make sure is that you put in the same amount of contracts as you're selling and buying. So if I want to do 10, I do 10 in both. If I want to do 20, I do 20 in both. I just need to make sure that these are equal. Down here, you want to go net credit. All our trades are credit plays. This is a credit strategy, so we want to do a net credit. That means we're going to save money. And the price is where we put the premium. Our premium is 0.25. Now, don't put $25. Put 0.25. And we want to make sure it's good for the day, and that's all we have to do. As you see, we're going to sell to open SPX April 1365 puts. That's what we have down here. And then we are going to buy to open SPX April 1360 puts. That's what we have here. And we're going to do it for a 25-cent net credit, and that's what it says in our premium. After that, we click preview order, and it goes through, and we confirm it again, and the trade is done. That's how you do spreads in ETrade. Very simple. There's several ways to do it. It's very simple either way. You just need to make sure the information is correct. Make sure you confirm everything at the bottom, and then just click send, and you're good to go. Now, we don't always trade vertical spreads. Another type of trade we have is just naked options. And here's an alert for naked options. Again, we have the date, we want to open a new position, and then the trade, we have sell SPY April 135 puts. So, how do we put in that order? Log into ETrade, hit your trading and portfolios, make sure you're in your trade tab. Again, we just want to do options, so we click that. We want to do basic now. Before we did a spread, but because it is a naked put type, we just want to do basic. So we enter our symbol SPY. It comes up 151.89. As you see, the underlying price 151.89. That is correct. It's what we're looking for. And our order type, we're going to sell to open. Because we're opening new position, all our orders are sell to open. If we wanted to close a position, and I say our status says close this position, then you would go down to buy to close or sell to close, depending if it was a naked option or a vertical spread. But in this case, we want to sell to open. Our type is a put. As you see, we want to sell the April 135 puts. We go down to April. We pull up the strike and we click the 135s. And there we go. Our price type is always limit. You always want to use a limit order. And then for a limit price, we use our premium, 0.35. Make sure you put in the 0.3 and the 5. You don't want to use $35. You'll never get a fill. You want to make sure it's a 0.35. You want to make sure it is good for the day, and then you want to click preview order, and then you want to send your order. Naked options are a lot easier to put in than the spreads, but both are pretty simple as long as you just follow the outlines that they give you by either clicking spread or basic, and then you just fill in the information as we give it to you. Make sure you put in your contracts up at the top, and then it'll tell you again to confirm you want to sell the SPY April 135 put. That's exactly what we have in our trade for a 0.35 limit. That's exactly what our premium is, and you are good to go. All right, if you have any more questions, please email me, adam@thebulllogic.com. I'll be more than happy to answer any and all questions. Have a great day.